Hey guys, it's Laura, your favorite insurance agent, and in this video we're going to discuss your homeowner's coverages. I recommend having your homeowner's insurance policy readily available so that we can review the coverages one by one together. So let's get started. The first coverage is your Coverage A dwelling limit. This is the maximum limit that your insurance company would pay to repair your home from ground up in the event of a total loss. This is also known as the replacement cost value and should not be confused with the market value, which is the amount that your house would sell for. This number is calculated by the information you provide on the application regarding your property, as well as third-party reports such as Zillow. The following coverages are going to be a percentage of your Coverage A dwelling limit. So the next limit is your Coverage B other structures. This provides coverage for anything that's on your property but not attached to your home, such as a shed or a swimming pool. So if your Coverage A dwelling limit is $200,000, for example, then you're automatically going to be provided with $20,000 of coverage for other structures. This coverage cannot be removed even if you do not have any other structures. The next coverage is Coverage C, personal property, and this provides coverage for all of the contents inside of your home, such as your clothing and furniture, for example. Most companies provide 60% of your Coverage A dwelling limit. So for example, if your Coverage A dwelling limit was $200,000, then you'll automatically be provided with $120,000 of coverage for personal property. Some companies also allow you to reduce this percentage for a reduction in your premium. The next coverage is Coverage D, loss of use, and this provides coverage for expenses incurred to maintain your normal standard of living while your home is uninhabitable. So for example, if you had to live in a hotel while your home is being repaired, you would be covered for those expenses. The following two coverages fall under the liability section of your homeowner's policy. The first one is Coverage E, personal liability, and this provides protection for any lawsuits brought against you for bodily injury or property damage. This also provides worldwide coverage, so for example, if you're on vacation and you hurt somebody and they tried to bring a lawsuit against you, this would come from your homeowner's insurance policy. Last coverage is Coverage F, medical payments to others, also known as goodwill coverage to prevent future lawsuits. This is going to pay for any medical expenses related to an injury caused on your property. So if somebody got hurt on your property, but they don't want to sue you, they just want you to pay for their medical expenses, it would be covered under Coverage F, medical payments to others. Many homeowners insurance policies automatically provide coverage for tree removal up to a certain limit, debris removal, collapse of a home, or credit card fraud. I would recommend to contact your insurance company to see what coverages are automatically provided on your policy. If you are a person that has a lot of exposures, for example, many rental properties or vehicles, if you own a boat or motorcycle, then I recommend getting an umbrella policy which provides excess liability. Limits range from $1 million to $10 million depending on the company, and you would need to raise your liability limit on your home and auto policies to $500,000 so that there is no gap in your coverage. Most homeowners policies provide general exclusions such as earth movement, also known as earthquake, flood insurance, mold and fungi, termites and animals. Some of these can be added as endorsements for additional coverage. The standard deductible for a homeowner's policy is $1,000. Some companies offer a percentage of your Coverage A dwelling limit, such as 1% or 2%. So if your Coverage A dwelling limit is $200,000 and you have a 1% deductible, then your deductible would be $2,000. Of course, the higher your deductible is, the cheaper your premium will be. Most insurance companies exclude flood insurance. So if you are in a flood zone, you would need to maintain the government-backed up flood insurance, also known as the National Flood Insurance Program. Some ways that you can reduce your homeowner's insurance policy is by increasing your deductible or reducing your Coverage C, personal property. I do not recommend ever changing your Coverage A dwelling limit because you could be subject to a co-insurance penalty, meaning that you possibly could not be paid out on claims. I would contact your insurance company to see what exactly their co-insurance penalty is. I hope this video helped you gain a better understanding of your homeowner's policy. Please don't hesitate to reach out with any questions or concerns that you may have. I can be reached on my website at www.yourfaveinsuranceagent.com. Thanks for listening. I'll see you soon.